Ben ritrovati lunedì mattina sul floor del New York Stock Exchange. In questo momento indici in territorio negativo dopo una settimana particolarmente positiva, record seppur con volumi di scambio contenuti, ma ne parliamo con il mio ospite qui sul floor, come vedete Kenny Polcari, che è direttore delle operazioni sul floor per O'Neill Securities. Kenny, ben ritrovato, buongiorno.
Good morning, how are you?
I am very well, how are you?
I'm great, thank you.
So Kenny, we are going back down. It was a very good week last week, even though the volumes were very, very low. But nevertheless, we touched new highest, new records. So the market is back to Greece now after the euphoria. Now they are doubting again.
Right. Well, and we started as the week wore on last week. It was really all about Greece. No matter what macro data was out, no matter what happened with the Fed, it was really in the back of investors' minds what was going to happen with Greece. And then we saw on late Friday afternoon when they announced that they had finally come to the deal, that the Greek prime minister and the finance minister had bowed and come to the table, understanding that the Eurozone was really in control and that they could try as much as they could, but in fact, the agreement is the agreement. And the fact that they came to it caused the market to surge late Friday afternoon as people really thought, okay, now we're over this hump. Really, when you thought about it over the weekend, a lot of people had time to analyze it and digest it. The Greek citizens had a chance to kind of express their opinion. There were some rumblings there that they're already calling, Tspiris as going back on his word. And so the situation remains tenuous, which is what I think the market is exactly telling you. They have until tonight to present the final draft of the amendments, and whether or not the Eurozone accepts it is going to determine whether or not this deal goes forward. And so you see the market's just kind of digesting and waiting. My sense is, in the end, I think Germany will do it. I don't think they're going to allow it to unravel at this point because they realize really the pressure's really on Greece. I mean, it'll be economic suicide for Greece if they choose not to play by the game.
And so you think that the Greek tragedy, we can say, is still playing on the market, or the market is worried also about geopolitical issues that maybe they were not very looked at in the last few weeks, but maybe they can come back.
Well, it's absolutely now focusing on Greece today, but it's also, don't forget, there's still the whole Russia-Ukraine thing in the back of everyone's mind. And then tomorrow in this country starts a 2-day semi-annual Humphrey Hawkins testimony, which is Janet Yellen speaking to both houses of Congress, really about the state of the economy. So it's just more data. It's another opportunity for her to tell legislators and leaders in this country what she thinks of the current economy, where she thinks it's headed, what's the mindset of the Fed. And so traders and investors are going to be sitting patiently listening for her tomorrow and Wednesday to see if there's anything different that she says tomorrow that they didn't say last week when they released the minutes of the meeting.
Also, we saw mixed indications from the economy, mixed data, and especially also last week. And the market did not really react. Maybe the market is now discounting that, Janet Yellen probably this week will say again that, the economy is recovering, but maybe not that speed. And maybe we will not see any rate increase until the end of the year?
Well, I think that was exactly what happened last week when she came out with the minutes, is that the idea of a rate rise in June, I think, has been pushed back at least until late August, early September, so like August, September. And depending on what happens with the data over the next couple months, could push it out even again, right? Now, today we had some very weak housing numbers. The rest of this week we've got more housing numbers. We've got other broad macro data here in the States, which continues to be mixed. And as long as it's mixed, it's going to hold the Fed in a very, very tight position between a rock and a hard place. That as well, listen, don't forget, if they start raising rates, even a quarter of a basis point, it's going to just add strength to the dollar. And we've already seen what the strong dollar has done to some of the big corporate U.S. multinationals in terms of guidance going forward and the fear over a strong dollar and what's it doing to their bottom line. And so the Fed is, walking a very, very thin line here.
And we had a comment also during the weekend from Alan Greenspan about, what it can happen now when the Federal Reserve will start acting, when they will start, also changing, they have a massive balance sheet, and it can be very dangerous for the market. So now people are looking really ahead, not just interest rates, but, how the Fed will just over everything.
And that's the big question mark. No, we've never been in this position before, and so therefore, no matter what we do, it's going to be the first time. And you can't even go back in history and say, well, the last time we did it, this is what happened, or this is how we should manage it. No one really knows, and so that continues to kind of be the concern that simmers on the back burner. Now, you're not really going to know until you start to do it. Until it happens, until you start to raise rates. Now, if the economy continues to strengthen, and if this country really turns around in terms of the economy, then you would think as we move along, it would be able to handle small increases. Because don't forget, they're not raising them by a percentage point at a time. They're going to go very small. And they're going to time it such that it doesn't overwhelm the markets. And I think that's the other thing that investors and traders are waiting to hear. Not only the amount that they raise rates, but what is going to be the rate at which they raise them. Is it going to be every month? Is it going to be every 6 months? Is it going to be 3 months? And so until the market gets a little bit more clarity on that, it will continue to kind of play more to the cautious side.
Yeah. So having said that, what do you expect from this week? Now we are above 2100. Will it stay there?
I think we're hitting our head here. I think 2110, which is where it closed on Friday, is going to be some short-term resistance for the moment. There are some technicians that are calling for the market to rally to as high as 2125. Some even calling 2150 before you see the pullback. I don't feel it right now. It doesn't feel like there's enough momentum, and it also feels like there are too many question marks out there. So I think until we get over the grease thing, and until we get through the Janet Yellen, Humphrey Hawkins testimony, the market's going to be held in a tight range. If anything, I think the path of least resistance is a little bit lower. I think it'll find support at the 2090 level, and so we'll be stuck in that very tight range.
We'll see. Thank you very much, Kenny, and have a great week.
Thank you, and you too.
E grazie a voi per l'attenzione. Alla prossima.